Back with you here on the Market Day Report. I'm Marlon Bowling with you. We're going to go direct to Chicago to the CME Group trading floor, where we have none other than OliverSloup standing by. He's with iiTrader there in Chicago. And Oliver, boy, these are jumpy markets, at least in some markets. Some of them seem to be kind of falling asleep ahead of the reports tomorrow. But we did have some excellent export sales numbers for the corn, for the soybeans, for the wheat. Also, for that matter, for the cattle and the hogs. We'll get to them in a little bit. But we had some overnight sales for soybeans as well. Big sales, almost 250,000 tons. And that seemed to support the soybeans a little more relative versus the corn this morning.
Yeah, a little bit, but I think a lot of traders, producers, end users, basically all the market participants are kind of sitting on their hands waiting for tomorrow's USDA report. We're not really expecting a whole lot of surprises as far as the numbers go, but I suspect there will be volatility pumped into the market at the release. That's going to be 11 Central Time. A couple of key technical levels that we're looking at going into that. On the support side, 958.25 is the 200-day moving average. The bulls are going to want to maintain price action above that. We've tested it a few times over the past couple of weeks and have held, so that's going to need to hold again in order for bulls to get some momentum to the upside. Very technical, technically significant resistance really doesn't come in until 1027, 1028. That's 50% of this year's trading range, the 100-day moving average, and the original breakout from May 10th. So that's going to be a line in the sand to keep an eye on, definitely.
All right, so now we have had big moves today in the crude oil market, and if you recall, yesterday we had the ethanol industry reporting the second largest weekly production of ethanol on record, and you would think that would offer a little bit of support to the corn market. But let's check in on the crude oil market right now. Let's see what the latest trade is. It is still $1.80 higher at 43.51. That's on the September West Texas futures. From what I understand, it sounds like they are now expecting the demand to outpace the production for the current quarter.
Yeah, for the crude oil market, there's a lot of different catalysts at play. We've had the OPEC nations as well as non-OPEC nations like Russia come out and say they want to have a surprise meeting in September. But the market kind of discounted that, but we are seeing some buying back in on some of these technical levels, and I wouldn't be surprised to see that continue. There's a lot of resistance. I think about 44.76, the 100-day moving average. I suspect that the market will fail out there. We're short crude oil. We have been making lower highs and lower lows, and we're expecting that to be the trend going forward. We've seen rigs coming back online, which indicates to us that drillers are picking up activity, and we get towards the back end of the summer, we're going to see demand start to fade with supply rising.
All right, let's run through the current grain prices, and then we'll take a break and talk a little livestock market action. December corn right now just down 3/4 at 332.25. Can't get much quieter than that. September soybeans. Let's go over there right now on the soybean trade. Here we have the contract at 10.03.5. That's up a nickel. November up 3.5. On the wheat trade, Chicago is currently down 4.25 at 417.5. It sounds like Egypt has been snooping around for some wheat, so they did not want soft wheat, I understand. So the Kansas City market has September trading 1.25 higher at 413, and Minneapolis wheat is now 5.25 higher at 506.5. All right, let's pause for a break. We'll bring Oliver back, and we'll talk about our livestock markets when we come back after this. Thanks for joining us here on the Market Day Report. We're going to talk about our livestock trade now. We're going to go back to Chicago, where we have OliverSloup. And Oliver is with iiTrader. Now, we are going to talk about the livestock trade, and obviously you have a good ear for the markets there. Everybody watching at home can tell that. So what are you hearing in regard to the livestock trade? We've had some jumps and starts in that market today.
Yeah, it has definitely been an interesting session, probably one of the more entertaining sessions throughout the week. We started out on a little bit firmer note, then we saw some big volume come in on the sell side, but the market has rebounded nicely in both the live cattle and feeder cattle contracts. I want to start by looking at the live cattle, the October contract specifically, support level that we're looking at to hold to round out the week. 112.92 is the 50-day moving average. That was previous resistance, now becomes support. If we can maintain price action above this level, I do think that the trend remains intact, and we could see more buyers step in and press us towards the higher end of the recent range.
Interesting action that we're seeing here. October live cattle now down just 8 cents. Trading at 114.85, and that's after setting a low of 113.05. So we're much, much closer to the high of the day than we are the low, that's for sure. Excuse me, December is down 40 at 115.50 right now. On the feeder cattle trade, as we switch screens, we have September down $1.40 40 at 147.10, and October down $1.50 at 144.32 per hundredweight. Wanted to ask you about the lean hog trade here, Oliver. On the lean hogs, we have October. Now it's down 28 cents at 58.70. It made a valiant effort to really rally hard. In fact, it wasn't that far from going limit up early in the day at 61.45, but now we're back at 58.70. That's quite a dramatic turnaround there. They've given up almost $3 in value off of their high of the day, and now we're down 28 cents. What do you make of that?
Yeah, that is a big failure, and I think raises caution flags to anyone who's trying to buy this recent rally off the lows towards that 57 level. I really wanted to wait to see a price action sustained above 63 to step in as a buyer in this October contract. Doesn't look like that's likely to happen here in the near future as we failed to sustain upward momentum. So I think this was just short covering, and you could see some of those sellers step back in and resell at these higher prices.
All right, Oliver, good to talk with you again. Thanks for the information. OliverSloup with iiTrader in Chicago. The hog strength mark kind of fading away a little bit.
How about that? Yeah, what a range today in the hogs.